Hey, what's up, everyone? This is Evan Carthy from evancarthy.com. It is February 12th, 2019, even though up here it says February 13th, a couple hours fast based upon the hours I have set up for my website, but it's about 8:44 p.m. Central Standard Time. What we're going to go over today, what I'm going to look at the S&P 500 on the 15-minute chart, and then also as a bonus, I'm going to look at Caterpillar as well. So let's look at the charts. So here we have the ES, the S&P 500 futures contract, and what we're looking at is going to be the lightning trade setup. And the pivot points we're using are these circles, this point up here and this point down here. So what we have is a short side setup, or a sell. You can see there's the bottom pivot point, price came up, came and broke out, which broke below that pivot point, which initiated the lightning trade setup. Never came down and hit the 127. So then when it came up and hit the 38, the exit would have gotten moved down here just below the 100% Fibonacci level. But it continued to move up, finally hit the 100% level or the 0% level the other way. So that moves the exit to where this pink line is right here. The hard exit is the 50% retracement level, which is at 2711.50, but I always get out a little bit earlier just to ensure I get out safely for when it does come back and retrace. So the exit I have set up is 2713.25. So as you can see, prices continue to go up, go up, go up. It definitely could continue to go up from here, but what's going to happen is eventually price is going to retrace and come back down and hit the 2713 and 50-cent mark for it. So this is what I call, quote unquote, a free trade, meaning even if price continue, if I got in right here, which I'm not getting in, I don't trade the ES, but if I was, then I would definitely look into shorter right here on the 15-minute chart. I'm definitely bearish for it right now. Eventually price is going to come down and hit 2713.50. So currently price is at 27.53, so it has about a 40% retracement potential from where it currently is. Now, it doesn't mean price could continue to go up and get higher, because let me show you something real quick. Using the Fibonacci levels from the opposite way, right now price is bouncing off the 127 level, or it's actually going through that, and there's 143 right there, 161, 200, 261, and then the 423, and I think above that I have the 685 way up there. But yeah, so price definitely could continue to go up, but if I was trading the S&P, what I'd be looking to do is I'd be looking to short it right here. This is a real good level for it. If price did continue to go up, and I had plenty of margin, plenty of money to short it, then I would definitely be looking at getting in at the 161, the 200, 261, and 423 if price does continue to go up. But fortunately, I don't have that margin for it, but whatever. But that's how I trade. That's what I look for in the stocks and futures, and well, not really futures. I don't trade those too much, but mainly forex and stocks. But this is a perfect setup for it. It's gone well above the free trade line, which is the 50% line. So you still have plenty of movement for it to come down right here. So yeah, definitely for the short term for the S&P, I'm bearish for it. It will eventually come down and hit 2713.75. So at 2753.25, you got about a 40-point decrease in the S&P at minimum coming. It could continue to go up definitely, but eventually will come back down and hit 2713 and 75. So as a bonus, what I'm going to look at is actually I'm going to look at the daily chart on the S&P real quick just to see where it is, the MFI. And yeah, look at the MFI right here. So price went up, hit the overbought area, has retraced. Take out some of this stuff. Price came up, went, just slightly hit the overbought, the MFI. Let me go ahead and make that a little bit bigger. And then as you see, there's a big divergence going on right here. Okay, it didn't exactly hit the overbought, came really close, but price had a little bit of retracement back, continued to go up and up. But look at the divergence in the MFI right here. As price continues to go up, the S&P continues to go up, and make new highs, the MFI is not. So again, that is another signal that sooner than later the retracement will happen, and it definitely could be deeper on a bigger level, but definitely on the 15-minute level, we're looking for that retracement down to, I think it was 2713.50 or somewhere around that I mentioned earlier. Now we will take a look at Caterpillar right here, and we are using the 1 hour chart for this setup. And the setup we have, it's a lightning trade, and it is going to be a long or a buy size setup using this pivot point over here. Let me zoom in a little bit, make it a little bit easier to see right there, that low, this high right here, that pivot point. You see price came, broke up above the that pivot point, which initiated the lightning trade. Never went up for the 127, came out, hit the 38, never came up and hit the 100 level, went down, hit the 0 level, then it came up, made a really nice retracement up here, but never quite hit the 50% level at 143, 142, hit about 141, 74, 75. So it never officially got out of it yet, and ever since then, price has gone back down some more, gone back down, and here it is right here. It is just above the 100 or the 0% level the other way, and what I have up right here, there's the 50% box, there's the 50% level. I put the pink line just below it, so a good exit level if you are looking at a area to get out of the stock based upon this lightning trade setup is going to be around 142 and 75 cents. I can't get it perfect on the crosshair right there, but yeah, 142 and 75 cents. Price is currently at 132 and 67 cents. So you have about $10 more to go before, if I was in Caterpillar, I'm not right now and don't have plans to get into it, but if you are looking for a target area, that'd be a great one to get out of, because that would pretty much complete the lightning trade up to the long side. And you know, if it doesn't hit up at 143, about 73, 143.78, and goes back down again, then you can't get it again, because I mean, look at it right here. When it came over here, price went up with about 141.82, and then retraced all the way back down here to 116.26. So definitely, if you're in it, get out anytime, get some profits, and if it doesn't hit that, comes on back down, then feel free to get in again. Keep riding that wave until eventually it does take you out of the stock. Because what I like to look and see is the opposite way, how price has, how far it's gone down the opposite way. So let's look at this right here, and look at that, perfect. Hit right off the 161.8 Fibonacci extension level, the on the opposite way, and that has seemed to be the solid support for it, at least for the time being, ever since late October, early November-ish area right there. So that seems to be about the movement for, or the low, hit the 161, went right back up. So anyway, so what I'm trying to say is definitely I am bullish for Caterpillar and looking for an exit at around 142.72. Price is currently at 132.67, so there's still about, well, I think it's going to be at least another $10 move based upon the stock price to go up to. Plus, as an added bonus, let me show you one thing right here. You have still quite a decent sized gap to fill, where it goes from 133.67 to 136.11. So you have that going in your favor right there. If you're on it now, you do have a little gap down here, 129.22 up to 130.33. So definitely could see a little bit of retracement before it does go back up, but eventually price will go back up and take out the 142.75 level, and that would pretty much get you out of the lightning trade long side setup for Caterpillar. CAT is the symbol. Hope that helped. Have a good one. If you'd like to see me go over anything, feel free to let me know. Have a great day.